Hey everyone, in this video I'm going to answer which is a better growth stock to buy, Sonos or Fubo TV. So before I answer, I'm going to compare them on four metrics and then answer which one is the better buy. Starting with revenue, and you could see two things here. Number one, you could see nice growth from Fubo TV in terms of revenue over the last several years. And then you can also see the choppiness in Sonos revenue over the last few years as well, and relatively flat-ish revenue when you take out the choppiness, right? So no apparent revenue growth from Sonos over the last few years. And the choppiness just means seasonality. There's a lot of companies that generate seasonal sales where one quarter is their highest selling quarter. And for Sonos, the speaker maker, typically the holiday season would likely be the best quarter of sales as people are gifting and buying for the holidays. Fubo TV sells is a streaming alternative to cable TV, so it's subscription revenue. Subscription revenue does not tend to be choppy, does not tend to be seasonal, right? When you sign up for a subscription, you typically keep it all year, unless you're canceling the subscription. You don't really see too much of pause and continue with subscriptions. So the next thing I wanted to look at is cash flow from operations to sales over the trailing 12 months. And in this metric, again, two things are apparent. Number one, the phenomenal growth from Fubo TV in terms of this metric, and the fact that it's negative 25%. And then from Sonos, you see the figure is higher than Fubo TV, but it's still negative 2.48% and without demonstration of growth. Well, they were growing, I should say. That is until the economic reopening started to gain momentum mid 2021, and that's when Sonos saw its metrics deteriorate somewhat. And that's understandable, right? That's happened with many companies that benefited as people were staying home more often and buying things for the house, like speaker systems. And so Sonos benefited from that trend, but then as economies reopened, it kind of struggled and has struggled to regain its footing. Whereas Fubo TV struggled in the reopening, but then regained its footing. Similar story for the operating profit margin for these two growth stocks. The same story going here with Fubo TV showing excellent growth in the metric, but still being significantly negative at negative 32%, and Sonos being better in this metric, but not really showing much growth and flat-ish operating profit margin of negative 1.44%. So finally, I wanted to compare these two on valuation, and the metric I chose to use is the forward price to sales ratio. And judging by this metric, Sonos is more than twice as expensive at a forward price to sales of 1.233 compared to Fubo with a price to sales forward of 0.536. So to answer the question, which one of these growth stocks is the better buy today? I would say Sonos. I think Sonos is in a more sustainable position with its operating profit margins and cash flows being positive or close to positive, whereas Fubo TV is still losing a lot of money on a bottom line at a time when the cost of capital is rising, and it's precisely the time you don't want to be losing money on the bottom line. So primarily for that reason, I would say Sonos is the better growth stock to buy now. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.